You're watching the Mortgage Busters show. My name is Greg, and this show is all about paying your mortgage down at a fast rate of knots so you can be free and enjoy life to the max, but also to prepare for retirement. Adrian.
Howdy.
How are you going?
Goody, good. Good.
Now, that's a big deal, isn't it?
Of course it is.
Paying off your mortgage, but also preparing for retirement.
Which a lot of people don't actually do.
And it used to be, like a few years ago, you needed $1 million to retire, about $1,000 a week, $50,000 a year. You need about $1 million finance base.
And now they're
but
saying
it's gone up to
1.5.
1.5.
And that's
how
just
quick was
for
that?
Just for average living expenses.
Of course, when you're paying
crazy.
$5 million for a property in Glen Waverley, you know,
That was the dirt.
it doesn't. And that was just the dirt. Fantastic. Well, who was our guest? Of course,
Steve
McClatchy from
Master Guru.
Yes, from Loans Australia. Welcome back, Steve.
Thanks, Greg. Thanks, Adrian. Good to see you.
Very good.
Market's
You're looking
been,
healthy and fit and wild.
Thank you. Yes, I am. Yeah, out in the treadmill.
Very good.
A bit like me, huh?
Yeah, that's right. The market's pretty hot, isn't it?
Of course it is. Yeah.
And all we're hearing at the moment from a lot of our clients is, how can we keep paying this mortgage down? And the good thing is, a lot of people they're getting ahead by following a strategy, and that's the only way to do it. And a lot of people are telling us, okay, once we get the strategy, what can we do to enhance it? And we have talked about in previous segments about the debt weapons.
Oh, of course. I love those debt weapons.
Love them. Well, we're going to talk a little bit about that today as well.
Fantastic.
Some of the debt weapons, two particular ones. Cash flow positive property, which everyone's trying to do.
Yep.
And the second one is a fantastic new lending product we've got, which is called the Rapid Freedom Home Loan. Doesn't that sound good?
Can you run that by me again, please? Rapid
Freedom
Home
Home Loan.
Loan. Fantastic.
only
I
new,
love those
just
two words.
Brand new.
It's
Rapid and
exclusive.
free.
It's
Our
rapid.
exclusive, yeah?
Yeah,
Exclusive.
It's exclusive to all our clients, absolutely. It's rapid,
and free.
and it's free.
I love it.
Not free, but nearly free.
No, but it sets you free.
It does, because you're going to pay your home off a lot quicker, and you're going to get ahead. You're going to have some money left over to help your kids out if you want to, which people do want to do.
Well, it could almost be free if you do it the right way.
Well, the amount of money you'll save over a traditional loan, a traditional way of doing things, is phenomenal. And basically, that saving would nearly be the cost of a little house. So, in retrospect, you could save the cost of a house by putting in place certain strategies and following those and taking action and being accountable.
Well,
That's all you got to do.
I'm sure our viewers want to know about that.
Excellent. Well, let's get into it then. We'll have a look,
absolutely.
We'll have a bit of a talk about it. Let's come over here to the whiteboard.
The whiteboard, notorious whiteboard. Whiteboard. Yes, we go. Here we
So
go.
what we've done at Loans Australia, we've come up with a little program. We call it the Mortgage Freedom Academy. It's all about, like we said, having a strategy, taking action, being accountable, and then you'll get guaranteed results. No doubt about it. And
Now, that's a formula on its own, really, when you think about that.
It is.
Strategy,
Yes.
action, accountability, and results. I love it.
And over 20 years of doing this, the issues that people really have is everyone likes the idea of having a strategy. People like sometimes taking action, but the biggest issue is accountability.
Yeah.
People don't really want to be accountable, and they don't always have the discipline to do it. And that's what we're trying to. We built a system around that to help in those areas.
You know, everyone has the daily grind. And, you know, when do we fit in a strategy? When do we action our things, things and finances
find
and
time
whatever?
for it, yeah.
Exactly. There's no time. So that's what we want to do is put those 4 things in a strategy that's going to work for us.
That's right. And
I love it.
And it's simple. It starts with a thumbprint report. All they've got to do is get on the line, ring the Mortgage Busters show, get your thumbprint report, and that's the
Absolutely.
starting point. And these are some of the things that we're going to cover. Now, worried about never being able to pay your mortgage off. Did you realise that 30 years ago, you started off getting a 10-year loan? When you went to the bank, got a home loan, it was 10 years only. Then over the period of time, it's gone to 15-year home loans, 20-year home loans, 25-year home loans, 30 years.
And 40.
And because property prices are going so fast, they skipped 35, they've gone to 40. We've now got 40-year home loans.
Yeah, exactly.
No wonder the government's put back the retirement age to 70, because if you get your average home loan at 30, you've got to be 70 years old before you pay your house off.
It'll be 100 soon.
It will be. We look at
But
Japan and
also,
other economies.
you know,
it's
in the old
molten.
days, you know, when I was a kid, I remember, you know, people would retire at 60 and die at 65.
Oh,
and
gosh.
now it's, you know.
Yeah. Now, we're going to live at least 90. I
You're not allowed to now.
Of course not. No way. You can't afford to die.
No, well, you can't.
No chance. No way.
And, these days people are redrawing monies out of their mortgages for school fees,
Of
for
course,
holidays,
refinancing the
cars.
whole lot. Yeah. The whole
So that's
lot.
why mortgages keep going out as well, because they never pay it off. They
Yeah.
keep redrawing money.
Yeah.
So we look at that. Will it be impossible for your kids to get a mortgage? We get asked that all the time. How are kids going to get into the market? That's why they're staying at home longer, because they haven't got a deposit. They find it hard to save. Even rent's so expensive. It's
course.
very, very difficult for them. So imagine if you could pay off your home quicker and use some of the extra equity to help your kids get into a house. Imagine that. You get the kids out by they're 30 instead of being there maybe till 40.
Oh, shit.
So that's what you've got to look at. What lifestyle would be able to afford in retirement? That's what people want to know. Like you just said, people used to have 5 to 8 years in retirement. Now they're taking 30 years in retirement, a lot of people. They're living 25,
If not longer.
30 years.
Yeah,
That's
absolutely.
right.
Yeah.
And if you got used to living on your wage during your working life, who would want to go down from earning 80,000 down to 20 or 30,000 in retirement? That's a big difference.
Yeah.
So
yeah.
wouldn't you want to be on the same sort of money that you were living on? No, most people would, wouldn't they?
Of course.
Absolutely. So we want to look at that. Do you need to help making sense of the mortgage options? People don't have a clue about mortgages. They really don't. And one vital statistic I've seen about that is still 45% of all mortgages in Australia are standard variable.
Right.
What that means is they're getting the
45%.
highest rate of interest basically in the market. 45%. It's a massive.
45%.
45% of people are stuck on these high interest rate loans because they don't review it. They've gone into their local bank. The bank just gives them whatever product they can make the most money out of.
It's complacency.
It
is
is,
really,
yeah.
yeah. And but it's also people don't know what to do. You know, they just don't have
They're
another
scared
option.
also when
Yeah,
they
of
rock
course,
up to
yeah.
the bank. You
Yeah.
know, they're happy to just get anything.
Yeah.
Of course.
Because it's Mr. Bank Manager. It's
Yeah, well, exactly. I
gonna
still
do
don't
me a
understand why, at the moment, when I started mortgage broking 19 years ago, we were one of the first in Sydney to do it. There wasn't many people out there, so most people didn't know what a broker was. But over the last 10 or 15 years, there's been so much information out there that surely a person would go to a broker instead of a bank. At least with a broker, you'll get an option of 15, 20, 30 options.
Yeah.
With a bank, you get their option. They're just selling one product. And they have no idea really what you want to achieve. They just give you a loan.
but yet the top four still.
Yeah, the people trust the banks, which it's a good thing, but in a way they're not getting best value.
Well, still the big banks out there are giving you a little piggy bank when you're 5 years old in school.
Yeah.
And you have to have this affinity because you got your piggy bank,
Of
you got your
course.
savings account, and away you go. And did you realise that the top 4 banks in Australia, we know who they are, they bank or have 85% of the whole mortgage market.
Actually,
85%.
I'm surprised by
Just
that.
4 lenders.
Yeah.
And the rest of the market, nearly 100 lenders out there, are scrambling
No wonder
for just
they-
15% of the market. So for them to survive, it makes sense. They've got to come up with more innovative products, specials, things that big banks don't do, something to compete. Otherwise, they wouldn't exist. So people have to look beyond the big banks. I say to people, don't worry about the name of the bank, just worry about what they can do for you.
Yeah.
To me, that makes sense.
Yeah.
But still, a lot of people, they get scared. You know, they're giving you money, you're not giving them your
That's
money.
right. That's what I don't
Yeah,
get.
exactly.
No.
That's what amazes me, that they're scared of what?
Yeah, that's right.
Not having a loan if
No.
it's gone broke?
So they're the things that we're going to talk about. And this is the things when they ring up to order their thumbprint report that we start the process with. So we'll have a look at one more slide in this segment.
Gee, we haven't gone past the first slide yet.
So
We've got about 10 slides.
It is a two-part series.
It certainly is.
All right. Fantastic. We're about to go to the next slide, but I
Yes.
think we're about to go for a break. So
Fantastic.
we'll come back
Next
after the
time.
break, and we'll come back with this. What is it? What happens now?
Yeah,
That's a
absolutely.
great question to ask. We'll be back with the Mortgage Buster Show. You're back with the Mortgage Busters Show, and we're with Steve McClatchy.
All right, so part 2. So what we talked about before was all the issues that people are having and the obstacles in front of them, that they're getting high interest rates off the banks aren't there to help them, and realistically, they're not there to help them. They're there to give them a loan, and you're obligated to pay back that loan over a period of time. But we need to get ahead. It's costing us too much money. We want to pay our mortgage off. We want to have some assets there so we can help out our family as we go along. if
Well,
we
their,
can.
their duty is to the shareholders to make money, and that makes sense.
That's right.
It's it's obvious. Yeah.
And why we've been doing this so long is because the banks aren't there to help you. The accountants are there to do all the compliance. They're not really planning in the mortgage area. Financial planners don't talk about mortgages. So there's no one out there to help people. That's why we decided to do this. And here's the damning statistics. Unfortunately, this has been around a long time.
You see?
What the Australian Bureau of Statistics are telling us, at age 65, so when we're meant to have retired, only 5% of people actually have enough assets to live off in retirement that will give them the income to live in retirement, to have a good retirement. Only 5%. That's terrible. 5% of people are still working
It's
at
grim.
65.
Very grim.
Well, no one wants to be in this 27%.
No.
We'll skip that one. 63.
I'm not sure about that, but anyway, yeah,
we
go.
don't want to be there.
At least you got no debt.
You've got no debt, that's right.
Your family.
No family has, that's right, exactly. And then 63% are on the pension or on some sort of benefits. Now, no one wants to live on $10,000, $15,000 a year. You're not going to
Correct.
have a good life. We want to be up here in the top 5%. We don't really want to be working only to keep our minds active, but we don't have to. Want to be a choice. So this is what we need to come across. And these people don't plan. They're well-intentioned, but life gets in front of them. Kids are there. It's all happening.
You know, when you see those numbers and you see this pie chart, it's a thin sliver, isn't
Yeah.
it? The 1%, which is wealthy.
Not even a piece of
we're in the
No.
richest, the best country in the world.
Yeah.
Other than the fact that you get booked all the time. But anyway, 1%.
Well, it is horrendous. And look, realistically, doing the numbers, it's getting worse. You know why it's getting worse? It's taking more percentage of our income to pay our home loan off. Because the biggest debt for everyone is their home loan. And it's taking longer and longer. The loan terms are getting longer and longer. And it's all down to a fact we call compound interest. We've talked about this in previous shows. Compound interest is designed to help the person who's got it, in this case, the bank. The bank is lending you and you're paying them compound interest. So every time you're paying them back, you're paying them interest upon interest, which we'll talk about in a moment as well. So we've got to turn that around into a formula which is going to save you money.
Huge still. These statistics are
Slide number 3.
So if we have a look at this,
go through one.
this is some of the recent articles that we've seen in the paper. And what it's telling us, one of the big things is homes are going up very, very rapidly in price, especially if you live in the major capital cities. $6 trillion worth of properties are out there. That is a massive amount. We're seeing now in Melbourne, multiple suburbs have average prices over $1 million. How are you ever going to afford that? It's very, very difficult.
Correct.
It's not, most people won't happen. Yeah, perennial question, how much is enough? How much do you need in retirement? Earlier we talked about $1.5 million. That is rapidly increasing.
Yeah, it is.
As our standard
Yeah.
of living costs
Yeah.
are going up, it's getting more and more. And that's outside your family home because you got to live somewhere. So you have to build up an asset base outside of the home of over 1.5 million.
Well, you'd have to say for the average couple in retirement to live in a good, comfortable lifestyle with maybe an overseas trip every couple of years or whatever, you'd need about $100,000 a year, wouldn't you think?
I think that's reasonable.
So you need $2 million,
You would need $2 million.
correct? Which is above the average.
It is, and most people don't have anywhere near
No,
that.
they don't.
Most people
They
end up in
don't.
retirement maybe 300,000, 350 in
Yeah,
super
yeah.
on the average scale. Banks aren't helping you. The amount of money they're making on credit cards is horrendous. Home loans are 4.5%, 5%. Credit cards are still 17, 18%. So the amount of people we see with credit card debts, it doesn't help them. If you're carrying a credit card debt, you are so far behind the 8 ball because the banks are making so much money off you instead of you making money off the banks. So we have to turn this around. That's the critical factor.
Well, you never pay it off, is that right? If you do
Yeah, but
that.
we need to do this. We need to turn it around.
We do. And what we see, people are well-intentioned. They do the best they can with their financial structuring. But what most people are doing, they have a scrambled situation.
That looks complicated.
It does. And look, they accumulate things as they go. So most people have some sort of savings account where their wages go in and they have direct debits going out. They're paying for school fees, they're paying repayments, they're paying their groceries, things like that. A lot of people sometimes have a bonus saver account. So they're trying to get ahead. The banks say if you deposit money every month, we'll give you extra interest. The problem is you're only making 3 or 4% and then you're taxed on it.
Only
So
sounds-
after tax, you're making 2-3% if you're lucky.
sounds
So
good.
$3 out of $100. I mean, really, that's
the
pitiful.
point? It's
nothing.
It's pitiful.
Yeah.
What's the point?
You can't make money on that. Then a lot of people have multiple savings accounts where they have kids' savings going in there.
Yeah.
Yeah, they get the family part A and B, and maybe they put that in there. They've still got personal loans, they've got car loans, some people's salary package, all these different things are going on all the time, but it's not set up optimally. It's not set up in a way which is going to save them money. Even though they've tried to do the best, the banks aren't there to help you do the best, they're there to make money. So somehow we've got to change this framework to make it work for you instead of making it work for the banks. Does that make sense?
Yeah, well, actually, what you hit on there right there was the word optimal,
Yep.
which I think is correct. You've got to do it the right way.
It's just amazing how quickly people can pay their homes off if they just change this.
But it's also exciting.
Yes?
It's such a sense of accomplishment.
Yeah.
It's fantastic. You get excited and you see improvement and you get it done.
And that's what it's about. It is by having the strategy about how you're going to do this, then taking action to do something, the results are going to come.
Yeah.
Like, if you keep doing it and don't fall off the wagon after 1 month, you will get the results.
Yeah, you will. You will.
And
It's
Plus
positive
people-
reinforcement.
A
It
lot
is.
of people have too many accounts.
They do?
They can't figure it out, can
Yeah,
they?
yeah.
No,
They don't
they
know what's
don't.
coming out of what.
I know. We've seen situations where they've been paying off their investment loan and not paying off their home loan.
Yeah.
So they're paying off a tax-deductible property, but not paying off their home, which is not tax-deductible. They didn't realise they're doing the wrong thing.
Yeah.
But that's what they did. And we've had people set up offset accounts against the wrong properties, whole host of issues they've come up with because the banks don't tell them anything. They're not there to give advice. All they're there to do is say yes or no to a home loan request.
And this all starts through the thumbprint report.
It does. They've got to start
Of
somewhere.
course, yeah,
and
the
that's
thumbprint
way.
report.
They've got to get the strategy
Yeah.
right from day
Yeah.
one. So let's have a look at a typical mortgage because this is the biggest financial transaction that any family is going to entertain. So
Let's
what
look
we
at
hear,
a typical mortgage. Okay, well, look.
typical mortgage.
You know, I know we're about to go into for a break.
Yes.
So we've got about 15 seconds or so.
Perfect.
But really, you know, I mean, this is the meaty part of the deal
Oh,
today
yes.
we're talking about. So let's go to the break. We'll come back
Yes.
and we'll get it done.
Sounds
All right,
good.
you're watching the Mortgage Busters show. We're with Steve McClatchy, and we'll be back after this break. You're watching the Mortgage Busters show, and we're with Steve McClatchy.
Okay, what we're looking at now is the typical mortgage. In Australia, the average loan size is $350,000 across the nation. Over a 30-year period, the average interest rate's about 7% at the moment on an average 30-year term. What that's now telling us, if you pay the payments the bank tells you to pay, which most people do, you're going to repay $837,000, $892 over a typical 30-year loan.
It's massive.
So that's about another $500,000, another half a million dollars.
More than double.
It's massive. Yeah, it's more than double. 2.5 times
Oh, boy.
what you borrow, you will pay back if you just pay the minimum payments all the time. And at the moment, remember, we're on record low interest rates. So if you're struggling at the moment at 5% interest rate, imagine what's going to happen when the rates start rising. You know, rates did,
Yeah.
remember, get to 17% and
Yeah,
more.
Yeah.
So we are in a really low environment. So if you're really struggling now, your only option is to ring the Mortgage Busters show and get your thumbprint. You have to do
Well
it.
said, Steve.
You have to
Beautiful.
do it.
Thank you very much.
Now, we say it's $837,000 to pay back. It's actually worse than that because you got to take into account you got to pay tax on your income. So when you look at that,
That
it's using
pesky
after-tax
tax.
dollars.
Yeah.
That's
So
after.
you need to earn about $1.2 million to pay off a $350,000 home loan.
Hit it
That's amazing.
crazy.
$1.2 million you've got to earn to pay off the home loan.
It's nuts.
And that's not taking into account all the redraws that you take out over 30 years
Yeah,
and the
correct.
holidays you take out.
Yep.
all these
Penalty
other
payments
things.
and all sorts of stuff. Yeah.
What happens though, people get a home loan, a couple of years later they've racked up some debts, they refinance the loan into a better deal, but let's say they had 4 years in, instead of then moving to a 26-year home loan, they go back to a 30-year home loan.
Yep.
Or if that stage home loans are now at 40 years, they might take a 40-year home loan. That's why it's taking longer and longer and longer to pay it off, and you're paying back more and more and more to the interest of the bank.
Yeah.
It just doesn't, it's all too hard.
You're
Do you
starting
get a
Yeah, I
feeling
know,
for that
it
when you
is.
see
Yeah.
people?
They start again, don't they?
They
don't-
start
People are
again.
they
too
don't
busy
realise.
as it is, let alone worrying about all this stuff.
That's right. Yeah.
I know.
Exactly. So that's sort of where we sit at the moment. Then this is the reason why. And this will make your hair turn grey if it will fall out. It's called forward loading. This is a concept that's been designed to make the lender extremely wealthy. Like I saw today, a little bank's going to announce, I think in November, an $8 billion profit for the year. So they don't,
A little bank.
just a little bit. So you realise that if these banks are making that much money, they know what they're doing. So the way they've designed their home loans is a system of compounding interest. And what that really means to you is if we look at the first year of a home loan,
So with compound interest, just to
Yes.
go over it, it's interest on top of interest.
yes,
Yeah?
interest on top of
Okay.
interest is what they're charging you.
Right.
What it's showing us on an average home
Very
loan,
nice.
in the first 7 years of a home loan, did you realise that 80% of every repayment is interest profit to the bank?
80%.
80%
That's huge.
in the first, not just 1 year, the first 7 or so years.
But that's if things go okay.
That's right.
Yes.
Yeah.
You might go on forever.
Well, it could, yeah, it could,
Yeah,
it could
correct.
run long. You could keep extending it,
yeah, yeah,
refinancing
yeah,
it.
correct.
It's just on a one standard home loan, you're paying 80% of your repayment in interest. So only 20% of what you pay is going off the principal to reduce your home loan. It's tiny. It is tiny. This red chart here, as you go down it, that's the interest payment that you're making each month.
At
each year
least
on your
if it
home
was
loan.
an investment property, your interest would be deductible. But
Yes.
this is a home own. property. So there's no benefits.
But everyone reckons
Yep.
this is fantastic interest and principal. Go and get interest
no,
and
no,
principal. That's what they always
no.
say.
Yeah, exactly. And, but this is the Mortgage Buster Show.
I know.
We're here to educate and
right.
to get your financial thumbprint done.
Yep,
yes.
correct.
Yeah, knock it on your head because
Correct.
the system is not working. This does not work. If you keep
Obviously
paying
not.
what
Well,
the
it
banks,
works for the banks.
it works for the banks. If you keep doing what they're telling you to do, at year 25 on your mortgage, you are still paying 55% of every repayment in interest.
You need to say that again so that everyone can hear this.
55%.
Yeah.
After 25 years of paying the banks their money, more than half, 55% of that repayment each month is going in interest to the bank. So
Amazing.
you're still not paying more in principal even after 25 years.
That's
25
pretty-
years.
I know.
It is
it's-
horrendous.
Yes, it's amazing.
The only way you can get ahead and change this is completely change what you're doing. So one thing is, in the first 7 or 8 to 10 years, you have to knock as much as you can off that home loan because all of it is bank profit. You're paying nothing. Just imagine if you had a home loan, and the banks love this. You have a home loan for 7 years, and then you refinance to another
Again,
bank.
for another.
They don't care. They've made all their money.
But people do that. They do it all
All
the
the
time.
time.
And we've seen it heaps of times.
It's because they don't have a strategy, they don't know what action to take, they're not accountable, and they're not getting the results. Not many people are getting the results. And we
Most
see a
people
lot of
don't
people.
have a strategy. They just
No.
rely on the banks and what they do what they do and that's it.
Yeah,
too
but they
hard.
pay fortnightly.
Yeah.
That's like the big
Yeah.
bank strategy is
Yeah,
pay
yeah.
fortnightly. That's their big thing.
Chops
course.
a little bit.
Yeah,
off.
and excellent. So that's what it's all about. What we've got to really look at is strategies in the first 7 years to help
take a
pay
seat.
down your home loan, which we are going to talk about next up.
So, Adrian, remind the viewers about what the financial thumbprint. What do they need to do? First of all, we need to contact the show, the Mortgage
Yep,
Buster
yep,
Show.
yep, yep.
So, what are the details?
Well, the details should be at the bottom of the screen, but
Which
it's
is?
1300 TMB show.
1300 TMB
Or
show.
you can go to our website, www.tmbshow.com.au.
Just say that again for me, Adrian.
www.tmbshow.com.au.
.com.au.
And a lot of people don't realise every single show that we have is on YouTube. So if you just go to YouTube, Google the TMB show or the Mortgage Buster show, you can see every single show. So you can actually learn everything that we've put together over almost 2 years now.
That's right.
There's
No,
over
that's what
30 plus
about.
videos there now.
How many shows? That's 13 episodes. 13
There's-
times 4
there's
times
about
2 years.
30 plus a few others that we've done, yeah.
There's a wealth of knowledge there. Steve, thanks again.
Thanks again.
We're
See you
going to
at
go
part two.
part
Yes.
2. We're going to look at
Absolutely.
part 2 next time. What's the one gem that you've got to take away from this information gathering we had today?
The big thing is that what you're doing now is not working. Don't listen to the banks because they're the ones making the money, not you. They're making compound interest off you. You've got to turn around and make compound interest off them, which we're going to talk about next episode.
Which is the simple interest.
Simple interest.
I'm excited.
Absolutely. And a concept called debt weapons.
Debt weapons. So you've been watching the Mortgage Busters show. Don't forget our thumbprint report. This is what it looks like. Make contact with the show. We'll come back. We'll make contact with you. We'll meet with you. Get it done. Improve your situation. Pay your mortgage off. Get into retirement. Make sure that you have a fantastic retirement for the future. And we'll see you next week.